Why would anyone get a mortgage right now when rates are higher than they've been in over 20 years? The simple answer is that deals are still happening. And right now, most sellers are offering discounts that can be used to pay for your closing costs or buy down your rate. Today, I'm going to show you how to put those seller funds to work using one of the most effective tools in the mortgage arsenal right now called the 2-1 Temporary Buydown. Hi, I'm Mike, and welcome to the channel. Look, I get it. You've probably seen news headlines everywhere that are telling you mortgage rates are higher they've been today in over 20 years. This is especially true if you already own your home or you bought or refinanced from mid-2019 to early 2022 when we saw historically low interest rates. People were getting loans all day long in the low 3s and 2s and even some as low as 1.99%. Of course, the side effect of those historic low interest rates was a frenzy of home buying that drove prices literally through the roof. What did that mean for the average Joe and Jane homebuyer? Basically, if you didn't have at least $10,000 to offer over asking price, or maybe you needed an FHA loan because of your credit score or debt to income ratio, you were hosed.
Game over.
Homes were flying off the shelf, sight unseen, zero due diligence, offers closing $100K over asking price with leaseback clauses where the seller could even stay in the home for up to a year and just pay the new owner's rent until they figured out their next move. It was truly a crazy time. Okay, fast forward to today's market. At first glance, it may seem like the polar opposite. Mortgage rates have more than doubled since then, but there's a catch. Due to the lack of inventory, home prices only showed a moderate correction in price reductions. This graph is showing the average home price in the United States since 1987. You can see the run-up in the middle was how home prices appreciated just before the crash in 2008. What you'll notice on the right-hand side of the graph is that we had a healthy pace of appreciation for a solid 8 years up until 2020, which is when things really took off. And you can see the peak ended around June 2022 when prices started declining again after rates had gone up. And that little blip on the very top right corner is today's market. Prices are back on the rise simply because the demand is higher than the current supply of homes available. Couple all that with the expectation that mortgage rates should start trending down over the next few months and keep going down over the next couple of years, which will likely keep driving demand and therefore home prices up. You might be left scratching your head thinking, will it ever be a good time to buy? Well, I'm here to tell you why right now, yes, right now, today, great time to buy. Enter the 2-1 Temporary Buydown. What is a 2-1 temporary buydown? How does it work? And how does it compare to a regular rate buydown? It's important to note that a temporary buydown is only available on the purchase of a primary residence. If you're looking to buy a second home or an investment property, this tool will not be available for you. Also, please understand the money used for the temporary buydown typically has to come from the seller or the builder. You can't do this with your own money. This is where your agent will truly get to test their negotiating skills. More on that later. Simply put, the 2-1 temporary buydown is a reduction in your monthly payments during the first 2 years of your loan. Effectively, your payments are 2% lower than your actual rate for the first year and 1% lower the second year, hence the 2-1 part of the name. This is accomplished by using a specific amount of money from the seller of the home you're buying, which gets set aside at closing and applied to each one of the payments you make over the first 2 years. Your interest rate is never actually lower, but the seller's subsidy that's applied to your payments equates to those lower rates. Now, there are other options with temporary buydowns, like a 1-1 temporary buydown, where you get a 1% lower rate in the first year and the same 1% lower rate the second year. There's even a 3-2-1 buydown if you're getting a big concession from the seller. This one, while not as common, has huge payment discounts. Let's run through an example that I just quoted the other day. We're going to compare this with a regular rate buydown, spending the same amount of money so you can see what a difference this makes in your payment. Here we have a purchase price of $479,000. This was a nice 4-bedroom, 2-bath, Split level, single family home with a fenced in yard, quiet street for a growing family. These particular clients have a townhome to sell that they've been living in for about 4.5 years, and they'll be netting about $180,000, which they're using most of towards the new purchase. Without the 2-1 temporary buydown, with the starting rate at 7.25%, their principal and interest payment would be $2,176.14 per month. Now, if their agent can negotiate a seller credit just over $7,500, this will be their payment for the first year, and this will be their payment for the second year. Those dollars from the seller will be applied to each payment they make, saving them over $400 the first year and $200 the second year. Now, let's take a look at another way they could have spent those funds from the seller just by doing a regular old permanent rate buydown. If you're not familiar, a regular rate buydown is where you pay a lump sum of money up front to get a permanently lower interest rate for the life of the loan. Based on rates that day, the $7,500 from the seller could have gotten them all the way down to a 6.5% interest rate. On the same loan amount, this would have put their principal and interest payment at $2,016.30 per month, just under $160 difference compared to the rate with no seller credit at all. Not bad, but here's the nuance. Anytime you're spending money up front to save a little bit monthly, you need to consider what we call the recoup time. Basically, how long does it take to realize a net gain? To figure this out, we'll divide the dollar amount spent up front, $7,500, by the amount saved per month, $160. To land on the number of months you'd have to make those payments to add up to the initial amount spent. In this case, that's just under 47 months. Pretty close to 4 years. Remember how we talked about the fact that interest rates are expected to come down in a pretty big way over the next 2 years? If you were to refinance within that time frame, then a huge chunk of money, granted the seller's money, is just being wasted. This is one of the advantages of doing the 2-1 temporary buydown. If you sell or refinance your home before all those buydown funds are used, the remaining balance is applied to the principal balance of the mortgage. None of it is ever wasted. Of course, this tool is certainly not for everyone. If you're living on a fixed income or you don't want to end up with a higher payment after those 2 years, then by all means, stick with the regular buydown. Now, before we go, there are a few other considerations about the 2-1 temporary buydown that you should probably know. Remember how we talked about your realtor's negotiating skills? If your real estate agent is using the common strategy of increasing the price by the exact amount of credit that you're asking for, there's a caveat. The home must appraise for that higher amount. If it doesn't, then you're back to the drawing board for negotiations. Next, if you have an assumable loan, generally any government loan like FHA or VA, then the remaining buydown funds would stay with the loan and be available to the person assuming your loan in the event that you sell the home during the buydown period. Lastly, the buydown funds cannot be used to pay any past due or late payments on your mortgage. That money is off limits. But I'm curious to know, is this something that you would consider? Let me know in the comments below. And of course, if you find this video informative or useful, then you know what to do. Smash that like button and consider subscribing to the channel for more great content. Thanks again for watching. I'll catch you on the next one.